I'm very pleased and honored to introduce our panelists. That's Fulake Okusania, who is a banking advisor with RBC Meeting Place, and also Keri, Emin, who is keynote speaker today. Thank you, ladies, for joining us, and the mic is yours.
Thank you very much, Elena. It's always a pleasure to come back to area to facilitate on topics that would be of benefit to newcomers to Canada and immigrants. I'd like to introduce my team, the RBC Meeting Place. A few years ago, RBC came up with the idea of having a one-stop location where newcomers to Canada can meet all of their immediate needs to help them settle faster. This place is called the RBC Meeting Place because we understand that 1 out of 5 Canadians are born outside of Canada. And this number is changing based on the immigration laws. The team is usually a team of 3, and I have all of them on the call today. And what we do is just providing advice that can help make the settlement journey smoother. Your focus is our focus, as you can see on the next slide. Your focus is our focus. We put in place programs and resources that takes away the headaches and the ups and downs that come with settling in a new place. Yes, you might still go through the ups and downs, but it's always nice to have a buddy to walk with. And that's what our team does. Today, I would like to introduce our speaker for today. We have thought about the fact that many people have thought of the dream of owning a home as a dream that is hard to achieve. So today we're going to be having our speaker, Keri Emin, who has worked in the financial services industry for over 20 years. She has worked in various roles. However, over the past 11 and a half years, she has worked as a mortgage specialist. She has helped many individuals and families achieve their goals of owning their own homes. And for those who already own a home, she has helped them to buy their second home or even purchase investment properties. And in some cases, she's helped to refinance their current properties. And where it makes sense for them to save on costs, she has helped them move their mortgages to RBC. Keri has been very instrumental to helping a number of newcomers to Canada achieve their dream of owning their homes much sooner than they expected. And she truly leads with advice, keeping the client's interest as a priority and ensuring that they get value for their money and their time. No surprise that Keri has won RBC's most prestigious award for about 10 years out of the 11 and a half years of working as a mortgage specialist. We understand that buying a home and qualifying for a mortgage can truly be confusing, and it could also be scary for some, especially because it may be the largest single transaction that anyone may complete. So today we are truly delighted to have Keri Emin on this call today, deliver this presentation to educate and answer questions around mortgages and buying a home for the first time in Canada. Join me in welcoming Keri Emin as she delivers this presentation. Over to you, Keri.
Good morning, everybody. Yeah, my name is Keri Emin, as Fulake mentioned, and I've had the pleasure of being a mortgage specialist with RBC for the last 11 years. It has been something that is ongoing change and excitement, but I truly do love being able to set clients up for their dream of home ownership. And so I'm very passionate about my job and truly enjoy being able to provide clients with the information and advice to give them the confidence to go into home ownership here in Canada. For both newcomers as well as those that have resided in Canada for their whole lives, there is a lot to learn and know about buying a home in Canada. So we're here to really just provide that advice on their specific needs and circumstances to ensure that they customize their mortgage to meet their needs. But buying a home in Canada for newcomers is quite a bit different than if you've resided here for a while, because there's very unique circumstances and so many different scenarios. We'll touch on a few of those today as we go through the presentation. But first, to start off with, I wanted to go through some myths about mortgages for newcomers. And this might be some information that a number of you have heard along the way. But we just wanted to let you know that a lot of that is myth, and things have definitely evolved with respect to lending to newcomers when it comes to getting a home. So first off, you may have heard on a couple of occasions that newcomers in Canada will not be able to work with a major lender or a major Canadian bank. This truly is not circumstances, and it is not accurate. In fact, we understand that there's a lot of unique needs, and we have adapted our programs and our qualifying in order to ensure that we are able to assist newcomers to Canada, as all major lenders here in Canada. The second myth that you may have heard is if there's not a well-established credit history in Canada, that you're not eligible to look at purchasing. You need to get a long-standing credit history. Number of different programs, but there is ability without Canadian credit history to still qualify in Canada under certain programs. So definitely take a look at your specific needs there. And then another myth that we would want to ensure that is addressed today is that you require at least 2 years of Canadian employment history. That also is not accurate. In fact, we have been able to qualify clients with minimal employment history and even at times foreign income to qualify. So there is a lot of unique scenarios which we're going to touch on some of them for you today, just to ensure that you are aware that your circumstances could have you buying a home sooner than expected. So let's take a look first at why is it important as an individual before you go out looking for a home to go and get a pre-approval. What a pre-approval does is it shows the seller that you are serious about buying, that you are in fact in a position to look at buying because you have already gone to a lender and given the indication that you are pre-qualified to purchase. It also helps you for any last minute surprises that you may present to you as you find that perfect home. The last thing we want is for you to find that dream home and all of a sudden be in a position to not qualify or need additional things in order to qualify. It adds additional anxiety that is not needed when you're purchasing a home. There's enough as it is to go around. Also, it does give you an indication based on your specifics of how much you can borrow. So it would give you an indication of what that borrowing limit is in relation to your purchase price. In addition, especially in an environment right now where we are at low interest rates, it is important to also protect you against any rate increases. So when you do get pre-approved, now this is RBC, as we do offer a rate guarantee of up to 120 days. Some lenders are more at a 90-day rate guarantee, and that will vary just depending on where you do your pre-approval, but it secures you into pricing as well for that period of time if you were to find a home. So we obviously want to look at securing in the lowest interest rate possible for you to ensure that your expenses are at a minimum. So what impacts a pre-approval? There is 3 main things that you will look at or a lender will look at that will dictate what your pre-approval amount would be. The first thing we look at is that you've got the available funds for a down payment. What a down payment is the amount of money you need to put in to purchase your property. So that needs to be funds that you have available and not available to lend to. And then we also need to ensure that you've got the closing costs. And we'll go over a little bit about what some of those closing costs are in the future, further down in the presentation. But we are looking that you've got the funds available for ensuring that you've got the down payment as well as can cover off the expenses of purchasing your property. Secondly, we look at your credit history. We'll go into more detail on this in future, but this is both Canadian as well as any history. Sometimes we do verification from other countries as well. And then thirdly, what are we able to use as verifiable income? We need to ensure that your income is going to be able to support these new housing costs. And very important to double check with your lender on what is verified income that is available to use for your particular pre-approval. We look at those three things. Now I'm going to dive a little bit into some more specifics on these. So your down payment. In Canada, there is a requirement to put a minimum of 5% of your own available funds into the purchase. The available funds for purchase on an example here would be, if you are looking at purchasing for $350,000, you will require to have $17,500 available. What are some available sources of funds for down payment? We have confirmation of cash. So cash, which would be any liquid asset, cash, RSPs, tax-free savings account, any funds that you personally have in your name that would be available to use towards a down payment. Now, the time in account can vary depending on the program, but as a standard guideline, we do require a 90-day history. There is some exceptions if we are moving funds from other countries. So always take a look at your specific requirements on your which program you're qualifying under. Gifted funds are also often available as well to use for a down payment. Those are required to come from an immediate family member only. So a friend is not able to provide you gifted funds. There are some rare exceptions to this. So if your circumstances have funds available from gifted or other sources, please ensure to check with your lender on that as well. A lot of you may have heard of a government program that is also being offered right now. So there is a government first-time homebuyer incentive program where once you have come up with your 5% down, the government would look to increase your down payment. And in some situations, it's up to 10% additional down payment. The one thing to really note on this is that the government now would have a percent ownership of your property for the amount that you had the incentive for. The funds are required to be repaid back, as well as whether there was an increase or decrease in your value of your property, then you would have to offset the repayment with that percentage that they would have received as 5% owner of your property. There is qualifications that are required, and there is parameters the government has set on this. So you will want to double check if this is a best option for you, and your lender will be able to help give you more guidance on that. So we went over the down payment of 5% and a government program available for you. Let's take a look at some of the closing costs that will be required from you in order to purchase a home. So the first and likely the most expensive closing cost that you are going to encounter with respect to purchasing is a lawyer fee. That fee is approximately $1,500. That does vary a little bit depending on the property you're purchasing. But what they will end up doing is changing over that title of the property to your name. They are going to change it from the seller's name to your name. They are going to ensure that anything that the seller had on title as a mortgage is removed and your mortgage is put in place. So they are ultimately going to allow that final part of the transaction to take place. Another cost is an inspection. Now, this is not a requirement by the banks, but it is strongly advisable. It is advisable as an inspection will give you an indication of not only if everything is up to code with the property, so your electrical or anything else with respect to the property, or if there's maybe been some water damage that you weren't aware of, it is going to give you a report about 20, 25 pages long on your property and give you an indication of when you might anticipate something to be required to be repaired, or if there's something that is going to be urgently required to be repaired. So you will know from a maintenance perspective what some of those costs might be, as well as if there is something you are not comfortable with that inspection, it will allow you to not proceed with respect to that purchase. If you are purchasing a condo, it is strongly advisable to get a condo document review. What that is a company that will review the condominium documents in full and give you an indication if there's something with the bylaws that you would want to consider. It is going to take a look at the reserve fund. Do they have enough funds available to do the maintenance on the property that might be coming down the road? That will prevent you from having any surprises after moving in with maybe any special assessments or something that would be coming on that condominium. Definitely an advisable piece to the transaction. If buying in Alberta, we do not have land transfer tax. Some provinces do have a land transfer tax that is applicable on purchase. This cannot be added to your mortgage and is a requirement to pay by cash. So if you are purchasing in another province outside of Alberta, be sure to check and see if you are needing additional closing costs to cover a land transfer tax. Some of the things that are going to vary with your purchase is your moving expenses, any maintenance to the property, any new furniture you've decided you want to purchase to make it your new home. So those are things to consider, but of course are going to vary extremely depending on your interests and your needs. The lawyer is also going to do what's called an adjustment. There's going to be adjustments based on purchasing a property. The realtor that you are working with is working for you, but is paid for by the seller. When you are a buyer, you do not incur any realtor costs. When you are selling the property, you will be responsible for not only the realtor that is listing your house, you are also going to be responsible for the buyer's realtor. So you are responsible for both parts of that transaction. So now going on to, we've covered the first stage of it. So if we've got the down payment and we've got the closing costs, guess what? Check one, you're already done. Your check one done. Let's go on to your credit history and see if your credit history will now look to qualify you. So a general requirement is that we would need to confirm a credit history of 12 months. As mentioned previously, this does not always need to be a Canadian credit history. At times, we can use other countries' credit history requirements or bank letters. It is all going to depend on what program we are qualifying you in order to purchase the property. So good to double check on that. But if you are in Canada and your goal is to buy a home, it is very, very important to reach out to the branch partners, reach out to the bank, look at getting a credit card, look at getting some credit so that you can start establishing that credit history here in Canada. It is a very important key piece to purchasing a home. Ideally, we do like to see 2 trades for a 12-month history. What a trade is anything that is going to report to your credit bureau. That would include a credit card, would include a car loan, would include student loans. Most phone bills will report to your credit bureau. It is something you will want to double check if you are counting on that as one of your trades, but most of the phone bills will report into the credit bureau now. So that will help you establish credit here in Canada. One of the big pieces to the credit bureau is having a good credit score. But what impacts a client's credit score? Payment history. So look at the portion of this pie here on what amount is payment history. almost 25% of your score is going to be based on your credit history. So are you making the required payment on time at all times? The next most important is credit utilization. Card that has a $1,000 balance or limit, and you have a balance of $1,000, that is actually going to negatively impact your credit score because you are using a large percentage of the credit that is available. So the amount of the credit that you're using on that credit card is going to come into play and is going to impact your credit score. So for instance, if you had a larger credit card of $5,000 and had that $1,000 balance, that is going to really help your credit score. So keep in mind how much of your credit you are using and what that is reporting to the credit bureau as well. Some other things that are going to come into play is how often are you applying for credit? Different credit varieties. Do you have a mix of the credit cards? So do you have loans as well as credit cards, as well as mortgage? And then of course your history, your length of history. So how long have you had that credit history? And then also, do you have too many accounts? Us as Canadians do typically have a credit card, likely a line of credit, especially if you are a homeowner, a car loan, and a mortgage. That would be standard. It is not common practice in Canada to have 10 credit cards, or there's a need for those 10 credit cards. So keep that in mind as well. Definitely talk to your bank, text your banking advisor. We can definitely help you specific to your needs on how to get that good credit score as well. So the last thing that's looked at when we are looking at a pre-approval is your income. How much income do you have in relation to now taking on this new housing cost? Now, income is verified in very many different fashions. Income sources are from a ton of different resources. So there is different qualification based on how you're earning your income and the consistency of your income. So a verifiable income for full-time employment, some programs require that you have 3 months full-time employment in the position, as there is sometimes probationary periods. So sometimes there is the requirement to pass that probationary period. Sometimes if it's a field that you've been in before and we're just changing employers, we just need to confirm that you are currently full-time employed, and that is satisfactory. Part-time employment, key piece on what we can use as part-time employment, we can use guaranteed hours only, and we would need to see the consistency of those guaranteed hours with confirmation from an employer that there is guaranteed hours in a position. Or we do need a longer history, and we do need that 2-year history that was previously alluded to with respect to myths of employment. If you are commission, if you are casual, if you're on contract, we do need a 2-year history of reportable income due to the reason that it is varying. It is changing. There really isn't that consistency or ability to confirm that it would be available to you long-term. Now, self-employed, if you are looking to start up your own company or have your own company in Canada and you are self-employed, we generally need a 2-year history of reportable tax returns. So this tends to be even longer than the 2-year history of being in business, because we don't report the taxes, or we don't report our income from a self-employed perspective until the following year in April. Definitely talk to the lender, definitely talk to an advisor on any program or any income that you've got to ensure that we're using the proper income to verify you when you are looking at your pre-approval. Some of the other things that are considered, and there is some variance to what lenders will use and qualify, but childcare benefits can be used. Pension retirement income, alimony, child support, other income sources. So some other income sources that you may have are foreign income. At times we can use some foreign income. Some other incomes are from trusted. So a lot of different scenarios, a lot of different individual client circumstances, just depending on what you are looking for, what program we are qualifying you under as a newcomer to Canada. This can really vary. So very important to take a look, meet early with an advisor to ensure that we've got it in place so that we can verify the income that you're wanting to qualify. Now, thought I would touch a bit for you all on the mortgage programs. There is so many varying programs for newcomers to Canada, and varying programs depending on your status. So we will qualify clients differently if they are permanent residents versus a non-resident. Permanent residency does allow you to qualify under our standard lending guidelines. Should you be able to qualify under our standard, then you would qualify the same as somebody that has resided in Canada indefinitely. We also do have programs for non-resident clients. Income sources, there's foreign income or Canadian income. We do have programs for both of these. Down payment. Down payment is going to come into play and be part of the criteria. I referenced earlier that there's a minimum of 5%. Under some of the programs to qualify, there is going to be a requirement for a higher down payment. This will all depend on what program you are qualifying under. Is it a high net worth? Are we doing it just based on assets? All of those are going to be looked at as the whole picture to determine what your down payment requirement is going to be. One thing to note on the down payment is in Canada, if you have greater than 20% down, there is not a default insured requirement on your mortgage. That will save you from this expense and will require the lender just to qualify you on their own. Definitely talk to your mortgage advisor with respect to what is going to be the best for you. We also have ability to qualify clients without any income here in Canada. It is considered our high net worth, and this will be based on liquid assets available, and there is programs without any income source to still be able to qualify you. And then the length of time that you have been here in Canada and employed in Canada will determine some of the programs that will also be available for you. Each program is very different. Each client situation is very different. So please, if you take anything away from this, please do know that it is important to start that pre-approval early, even if it is a couple of years down the road that you're looking at it. But take a look at your current situation and what you need to do to get there to be a homeowner here in Canada. So important that every client situation is different. Review it, please, with a particular lender. That can be any mortgage lender you're looking for, but I would be happy to answer any specific questions that you've got. To book an appointment, I would ask that you reach out to my assistant, Karen Gaucher, and send her an email or give her a call, and she can then schedule an appointment, and we can do a full pre-approval for you to give you that confidence and security to know that you would be in a position to be purchasing. So I do know that there's always a number of questions that are on home buying, even for Canadians here. So thought I would open it up, see if there's some generalized questions that you've got, anything specific. I'm happy to answer questions. Give me a call, email anytime, and or send my assistant an email for an appointment.
Thank you very much, Keri. That was really very informative. When I came to Canada 20 years ago, I waited for 4 years before we purchased our first home because we fall for those myths and legends. We didn't have somebody like you. I just want to mention also that the credit history is a big concern for our clients. So just so all the participants know that we have a separate webinar provided by RBC on the credit history, and it's on our YouTube channel. So where we're gonna have these mortgage details of today's webinar, we also you can also check the credit history there. So Sarah, what questions we would like to address today?
Thank you, Elena. We do have one question from Serge. As an immigrant, is it possible to sell my property back home to guarantee the 5% cash?
Yes, we definitely can use, if we have verification of a property back home that has been sold and those funds are verified and available, those definitely can be used as a source of down payment as well. At times it does need to have the funds in the account. At other times I have gotten it verified that the sale proceeds would be available prior to the purchase here in Canada. Those circumstances might be a bit different, but those funds are 100% available for a down payment confirmation.
Thank you, Keri. Here is one question from the Q&A box we already answered about the recording. Yes, there's gonna be a recording, and in my follow-up email I am sending you Keri's email and her assistant email so that you can book an appointment with Keri in case you have specific individual questions which we are not going to address today. So one question for you, Keri, on from Q&A is, as an immigrant, is it possible to sell my property back home to guarantee the 5% cash?
Yes. Yes, I think we took a look at that one. That one is available. There is other sources that we can use outside of cash and gifted funds. There is also some borrowed options if we want more than 5%, but take a look at your specific situation with your advisor, and then all of the down payment available sources can be discussed. So if you have means for other funds, do definitely take a look at what would be available and if that would be supported ahead of time.
Sarah, anything in the chat box?
Okay, we have one question. I am currently employed, but will be transitioning into postgrad studies with the same research team I am currently employed with. I will continue to have a steady income through my postgrad studies. Will this be considered a verifiable income for a mortgage?
Great question. That's a really good question. So people's circumstances will always change. When you take a look at a mortgage pre-approval, it is going to be based on your current income earning situation. So if you plan to go into postgraduate after you have been qualified for a mortgage, we take a look at the current situation of income. Do note that if you have not found a property prior to changing employment, you would need to get pre-approved based on your new circumstances. So a pre-approval will last as long as nothing changes from a financial perspective. When you get a pre-approval, it is giving you an indication that if the income is similar, if your credit is similar, and if your your credit, your down payment, if we still have all those three things that we verified for you, the exact same, or in a more preferred situation, so a higher income, better credit, less credit outstanding, then you would still be pre-approved. But if any of those circumstances change, you will want to ensure to reach out back and make sure that that amount would still be pre-qualified for you. So a pre-approval will last and stay as long as there's no changes. When you purchase a property, we take a look at your exact situation at that time. So if you plan to change to self-employed, people will look to purchase a property prior to changing to self-employed or prior to taking on that new student postgrad program that may be at a less income.
Great, thanks. Another question for you, Keri. There are so many questions now. We have enough time to try to answer them. So For RBC, what happens if after the 120 days are over, I haven't found a home? Will I have to apply for a new pre-approval?
After 120 days, the pre-approval will remain. So as long as we just adjust a little bit about that. So as long as your income is still the same, as long as your credit history is still sufficient and you've got the down payment, your pre-approval will last indefinitely. It could be a year or a year and a half down the road. What changes is your rate. Your rate guarantee will only last 120 days. So we want to ensure to reset that interest rate for you and extend it out another 4 months. So what you want to be taking a look at is those two things. Has anything changed? And or if rates have changed, we would want to reset that rate in order to extend that out as long as possible for you.
Thank you, Keri. There's another question from AJ. Can gifted funds from immediate family members come from outside of Canada?
Great question again. Yes, gifted funds can come from outside of Canada. We do not require a 90-day history. We just need to confirm that the funds are available. So we would need to confirm, and gifted funds is a little bit different for all lenders as well. So definitely double check which country the funds are coming from. There is some restrictions on that. So make sure that your country is eligible, but we can use funds from outside of Canada as gifted. Sometimes we do need to have the funds in Canada on deposit prior to purchase, but not necessarily at time of approval. So take a look on your specifics to that, but yes, those are definitely options available as well.
Perfect. So Amina's question is probably better, Amina, if you book an appointment with Keri, because it's too specific and she already mentioned it's individual. So I'm not gonna ask this question, but AJ has another good one that says, what changes at the 20% down payment threshold? Is one better than the other?
Okay, great question. Depending on the available funds that you have, and if sometimes it's not best to put all of your money into a home because there is going to be potential expenses and we want to ensure that we've got a safety net as well. But when you put a 20% down in Canada, what the government has put in place in Canada is they wanted to ensure that all individuals had an opportunity to buy a home, and those also that have less than 20% down. So any lender where you do not put 20% down needs to involve what's called default insurance. Default insurance protects the lender against you defaulting on your mortgage. So the lender will have your mortgage. So say RBC had your mortgage, we would now have the backing of a default insurance on your mortgage. This will allow, if you defaulted, RBC is not at risk as we would be paid our mortgage from the default insurer. So the risk to the lender is reduced. Government set this program in place to ensure that lending institutions are not at risk of defaults if the housing market were to drop. So it is a government regulated program, and there is a cost to you as a buyer to put less than 20% down. It's not a cost that you have to incur out of pocket. It is a cost that would get added to your mortgage and impacts your mortgage payment. If you put 20% down, we do not need to involve the default insurer. Under most standard programs, there is some programs for newcomers that require 35% down in order to avoid that default insurer. So if that's applicable to you, you may need some work permit programs. Some of the other programs do require a 35% down. So take a look, see based on your circumstances, what would be the best based on your situation, but it is definitely a cost that you incur with less than 20% down, but does allow individuals to buy in Canada without the requirement of 20%.
Great information. Thank you, Keri. Another question from our very engaged AJ. Is it generally unadvisable to apply for pre-approval at different banks?
With being a newcomer, you want to ensure confidence in who you're working with. Newcomers are very unique situations. You want to ensure that who it is you are working with, you are confident and you trust. If it is not a pre-approval that meets your needs, that you feel you would like to have a higher pre-approve amount, or you wanted to take a look if there was other specifics that would be available to you, then by all means, you can take a look at different institutions. A broker, to tell you a little bit about the difference between a broker and a mortgage specialist, say at RBC or TD, a broker has access to some lenders in Canada. They will have access to what's called an A lender, which, for instance, RBC is an A lender, but a broker has no ability to offer you Royal Bank mortgage. They have access to some A lenders and some what's called a B lender, which would be a lender that gives access to somebody that doesn't meet criteria to qualify at the major institutions. So a broker will have access to a number of lenders, but not all lenders. So if you bank with Royal Bank or TD, it also is very important to meet with your major institution to ensure that that option is available to you as well.
Wow, Keri, it's so complicated, and thank you.
I know.
For making it simple. It sounds easy when you explain it, so that's great. So
there's a lot. There's a lot of information, and then of course online there is just so much information these days, and what really applies to you, which is really the key and important for you to take a look at, really narrowing down that information to the specifics that are crucial for you to understand given your circumstances.
Oh, that's perfect.
Yeah.
I wish I had you 20 years ago when I came here, not waiting for, and actually my first mortgage was with RBC.
Oh, thank you.
Yes,
We appreciate the business. Yeah.
Just happened. So Topsy has this question. If one accesses the first time home buyer funds, can one repay the government at their own time without waiting to sell the property?
Yes. If on the first time home buyer incentive program, there are 3 times you can repay the government. Required to repay if you sold the property, or required to repay 25 years later. Those are the required repayment times. You have the option to repay them at any time prior to that. It has to be in full. So the repayment cannot be partial repayment. It has to be a one-time repayment. Strongly advise on a couple reasons to repay it as soon as possible. First off, if you can have it where you get to gain 100% of that equity of the property, the better off that you are. They have that 5% ownership for as long as you have not repaid them. So on that front, the sooner that you can repay them and the less gain of your property you have to pay them in order to repay that loan, the better off you are. The second that I think, and this is an assumption on my part, is 10, 15 years down the road, you may have forgotten that this was part of your home purchase. And when you are taking a look at maybe moving to another property and you are running what you've got as equity, you may have forgotten that you owe back that 5% down payment and any growth on it. So we might be calculating out for you a different amount of equity in your property without kind of recalling that, because these things in the moment, there is so much that goes on when you buy a home and the transaction takes place. And just to recall and remember that sooner you can get this repaid, the better. The strategy that I've worked with the clients that we have the first time homebuyer incentive use is we set up a savings plan for them on the monthly payment that was reduced. Their monthly payment was reduced by a certain amount. If you set up a savings plan earmarked specifically for the repayment of it, then it is that friendly reminder to ensure that we look at repaying back that loan, just as you would any other loan.
Thank you, Keri. There's another question regarding credit history from Marjan. Does too many credit history check impact the credit score? And how does it impact that?
So pulling a lot of credit bureaus will impact a credit score if you have a very thin credit history. So all of the things do come into play. So it will impact your credit history a little bit differently if you've got a long-standing credit history and you've got a couple trades that are already on there. A couple inquiries is going to have a real minimal impact. If you're just starting your credit and you don't have a long-standing credit history, that will have a bit more of an impact to your credit history. Also, what comes into play is, what is the inquiry for? Is the inquiry for a credit card? Is the inquiry for a mortgage? Those are treated very differently as well when it comes to seeking credit and what kind of credit you're looking for. And I think just to revert back to maybe a lot more of the specifics on that credit history specialization, I bet you that other webinar would be a great resource. And I'm ensuring that there's a contact there that might be able to give you specifics. RBC, and I know other lenders right now are having an online access to your credit bureau. So through RBC online banking, we have a link that you can actually view your credit bureau and view your credit score without it considered as an inquiry. It's considered what's called a soft inquiry rather than a hard inquiry. You can do a simulation within that credit bureau to see what impact it would be specifically to you if you had another inquiry or if you had another credit card. So you can kind of do simulations based on your own credit bureau.
Thank you, Keri. Also, those are tricks. Amazing. So on June 1st, Amina asks, there have been some changes on mortgage approval criteria. Could you please share some details on that?
Yes. So all of you, if you haven't purchased yet, all of you would be under the new regulation that the government has set forth, and that took effect June 1st. So anybody that had a pre-approval on the line before June 1st, you are definitely going to want to revisit your pre-approval, as it will have had changes. So what the change was is, when we take a look at the amount of your income that will qualify you to buy a home, there is a percentage of your income that is allowed to go to housing costs and other credit. The housing costs we use, mortgage, property tax, heat, condo fees, so anything pertaining to the house, we use that into our calculation. Now, the actual mortgage payment is not used. So what you've negotiated as a mortgage payment is not actually used in the calculation. What lenders across Canada have to use is what's called a stress test. We have to pretend as though your mortgage payment, now effective since June 1st, is at 5.25%. The government increased that interest rate that we have to pretend your mortgage payment is at. That's not your interest rate. It's just what we have to use in that calculation. They increased this stress test to try to lessen the impact of increased interest rates down the road. So they wanted to ensure that those buying homes were in a comfortable position to do so if there was interest rate increases down the road. It also has an impact on the housing market that has blown away in 2020. So they wanted to put some more stricter regulations in place in order to make it a bit more challenging to purchase property. So it's what we calculate into our calculation of your housing costs that were changed. And that is for all applications from 5% to 50% down. All applications are impacted.
Thank you, Keri. We have another question from Altaf. He's wondering if he has completed 1 year of contract and have done subcontract within this year, and he can put a 20% down payment to a home. Will he be eligible?
Some of this will depend on what the contract looks like, what the subcontract looks like, where the down payment is coming from, and residency or non-residency. So in that case, I would tell him to specifically, there's a lot of specifics on that you would want to gain a further understanding with respect to his circumstances to confirm if it would be eligible.
And the last question, Keri, is again from AJ, says, does pre-approval affect credit score and credit history?
It will count as an inquiry on your credit bureau. So it will count as an inquiry on your credit bureau. You can also get a generalized idea. So if your plan is not to buy for 2 years, you could look at your specifics without actually pulling your credit bureau. And now with us being able to take a look at our credit bureau and what our score is, we can work that into the manual calculation for you to give you an indication of support. So I would take a look at your situation. Your pre-approval does not have to actually pull your credit bureau necessarily. It would give you a more accurate indication to have all documentation and credit bureau and a pre-approval loaded, if you will, into the system. But it isn't required if you want to get a general idea with respect to being pre-approved.
Thank you, Keri. That was amazing. Thank you, Fulake and RBC and all the participants. It is my hope that today's learning event was a good and productive investment of your time, and that now you know how to purchase your first home in Canada, and connect with RBC for more tricks and tips. And I believe that's about it. Sarah, anything to add?
And any questions which were not addressed today will be answered personally by one of us. In our follow-up email this afternoon, we will provide the information of Keri and Fulake. So stay tuned for that email for additional information and on how to set up an individual appointments with our great speakers today. And that's it. Thank you so much for being with us today.
Thank you for having us and giving us the opportunity to just provide advice out in the community. So thank you very much for having us.
Thank you for having us.
Thank you, Fulake. Thank you, Keri. Thank you, everybody. Have a great day.
Thank you. Bye-bye.
Bye.
Bye-bye.